During my congressional testimony this past Wednesday, Congresswoman Maloney from New York took particular interest in NARUP's points about the fact that Latinos sometimes are underscored or invisible in terms of credit scoring because of the fact that we don't have traditional jobs from the standpoint that we're self-employed, we're in the gig economy. We also pay a lot in cash, right? And so sometimes that doesn't develop credit for us. So she took particular interest in how do we address that with credit scoring models? How do we make sure that Latinos, minorities have the appropriate scores, that they're not credit thin? And so the following clip is really a little dialogue that we had. She took particular interest in some of the suggestions that I had, and I think it really does a great job of summarizing the interest that Congress has in coming up with solutions to the difficult patterns or difficult obstacles that Latinos and minorities have in obtaining home loans.
I'd like to ask Joseph Nery. We all know that home ownership is absolutely critical for wealth creation in our country. We also know that the financial crisis really caused havoc on the foundations of home ownership and disproportionately hurt minority homeowners and borrowers. This led all of us to acknowledge the need for smart regulations and strong consumer protections. The ability to repay and qualified mortgage rules that went into effect a few years ago provide some of the vital consumer protections that we now know are necessary. But when thinking about barriers to home ownership today, particularly for minorities, I've heard concerns that some credit-worthy borrowers with non-traditional sources of income, like individuals who are self-employed farmers or gig workers, have difficulty in verifying their income using documentation other than their W-2, and therefore they have more obstacles than anybody else in obtaining mortgages. And with an increasing number of Americans making their living through alternative work arrangements, I'd like to get your perspective. Have some of the income verification form requirements unnecessarily shut people out of the mortgage market and particularly affected minority borrowers? So your take on that, please.
So I would say NARUP would agree that the current credit scoring models that exist have disproportionately affected a lot of minority consumers because, again, we have thin credit files or no credit really through the current models. Yet, we have had some stride and some improvements. The GSEs have had Home Ready, they've had Home Possible, and those programs have then started to take into account some of the different scoring or the different ways of establishing credit that Latinos have. Again, being self-employed, having gig economy, dealing in cash. But there still needs to be more done on that front. I think a lot of the legislation, as we're looking at either modernizing FHA, if we're looking at the continuation of the QM patch, for the GSEs, we really have to make sure that that's one of the factors that's incorporated in there, that we have to ensure that whether it's through alternative credit scoring models or whether it's the existing models are modified, there has to be a mechanism which accounts for the way Latinos and minorities traditionally bank. Because again, if we're talking about we pay cash for credit card payments, for utility bills, rental payments, that's not captured in the credit models that exist today, which were really developed in the 1990s. So they're outdated. We need to make sure that they become updated and they reflect the way the communities establish their credit and bank today.
Well, could you elaborate and explain and maybe give examples of other types of documentation that non-traditionally employed individuals could use to build their credit score?
So I would say one of the things, when you're talking about the ability to repay, for lenders that are employing some of these more atraditional models, one of the things that they look at is they really look at banking accounts, because they will see the deposits, they'll see that over time, there actually is money, there's sufficient money that comes in. And I'll give you an example. With, earlier I had mentioned one of my clients that had a tree trimming business. If you were to look into his deposits and you were to look at his monthly statements, you would see that there are sufficient funds to afford that mortgage payment. The payments that he's receiving in cash, that his wife was receiving cash, that the other family members were contributing to the bank account, that would be sufficient to cover the mortgage. But again, sometimes some of the more traditional models that are out there don't really look at deposits. They don't look at bank statements. They really look at the W-2s. They look at the tax returns. So if you're looking simply at bank statements, I think that would be one thing that would be important. Even if you were looking at receipts for rental payments, if you're looking at monthly statements for credit cards, those I think are all indicators of the ability to repay.
Do you think it would be a good idea to include all those in the criteria that they could be looking at?
I think so. I think it's very important because, again, as we look at millennials, in the Latino space, we're talking about 29-year-olds, but even if we look just at non-Latinos, if we look at millennials across the board, there are so many folks that in that gig economy, if you're an Uber driver by day, if you're doing something else online by night, you're not receiving your traditional W-2. Perhaps you're a 1099 person, so you're not receiving that easily identifiable salary that's 9 to 5. Right now, consumers are, you have young folks that are not working at companies for 30 years. They're moving every 3 years to a different company. They're creating their own jobs. So we have to be flexible. We have to adjust with how a lot of our younger generation, future of the country really, how they are developing, how they're earning their income. So I think those are factors that have to be incorporated.
I would like to follow up with you further. My time is almost up, because there has been legislation and proposals out that say you can use these other forms that include some of the things you said. Yet organizations that advocate for these communities have been very much opposed to the use of it. To me, it seems like a practical, good step forward, but I don't want to advocate or work on something that people who are most affected are against. And some of these organizations have been against it. I don't quite understand why. Maybe this is a further conversation we could have, but thank you and all the panelists for being here. My time is over. Thank you.